You guys know how I love to talk about being in the green and not in the red. What does that mean? It means being profitable daily as a day trader, okay? Are you a perfect day trader? No, none of us are, okay? Sometimes we take trades that just do not work out, but we have to practice proper risk management and trade management just as well. We've got to know that from the time or before we get into a trade to the time we enter that trade, where our exit should be and where we need to have our stop loss, meaning you have a hard stop or mental stop, okay? Depending on your trading plan and your style of trading. So please, none of us are perfect traders, all right? We strive to be perfect and, aspire to be professional traders, but it just takes time, guys. No one in this world is perfect in everything they do in life, right? There's no such thing as a perfect person in general, okay? Trying to practice it, yes. Teach it, preach it, yes. But we all fall short of mistakes, okay? Even when we trade. All right, so let's talk about those things today. I'm just going to show you and point out, just in today's session alone, just using it as examples, okay? To help you, if you're someone out there that continuously hits the brick wall, bumps up against a hard surface to where you're not really understanding when to get out of a trade or where to get out of a trade at, and you're constantly making mistakes over and over again. Maybe you do not know where to place your stop loss at. Now, I'm not here to tell you exactly where or how you should place your stop loss, because I don't want to force people's hand and tell them exactly how to trade. They need to learn, pick a strategy, implement the tools that are going to aid them along in their trading career. All right. So I'm not going to beat that to death. I just want to go ahead and jump right into it. So please, if you are struggling as a trader today and you are making mistakes over and over again, ones that cost you or are very costly to you, then please, you do definitely want to continue watching this video, okay? Because we're going to talk about stop loss placement, okay? And we're going to talk about just as well as getting out of a trade. Now, you don't always just have to wait for price to hit your stop loss, Maybe practice getting out of the trade early, okay? Before it actually hits your stop loss. And we're going to talk about that today. I'm just going to show you, how to get out of a trade early enough, if the market starts to come back against you, and knowing, if you kind of practice the way I trade, when to get into a trade, okay? The answer to that is simply just lies in rejection. You have to understand and be able to see and determine what are clear, defined rules to when it comes to pure rejection in the market and knowing when to take that trade. So first and foremost, let's talk about stop losses, okay? Let's talk about that, because so many people fail at trading because they don't know when to get out of the trade, and they blow their accounts time and time again, whether it is a prop firm account or simply speaking their own money, okay? And I want to clear the airwaves right now, guys. On this channel, if you haven't already noticed by watching some of the videos, we're talking about index futures, okay? That's primarily, if you come over to join this channel by clicking on the subscribe button down below and joining the Discord community, which is down in the description portion of this video, there's a link to join the Discord. We as communities within this channel, we trade primarily the index futures. We're talking about, regardless if it's the E-mini, or I should say the micro E-minis, okay, or just the E-minis in general, okay? Maybe you trade the ES or the MES or the, the NASDAQ or the micro NASDAQ or, the micro Dow, whatever the case is. Primarily, most of us trade the index futures, okay? Not any means of Forex futures or crypto futures or option futures, all the other asset classes that are out there in a sense, okay, or markets you could trade. So this primarily is a channel that it surrounds and is focused in on index futures, okay? So without further ado, let's jump into the video, okay? I don't want to keep talking. All right, so just just to give you a quick rundown when I'm talking about stop loss placement, if you are struggling with that, and that is, continuously slapping you on the hand, look, you have to identify your zone. Okay, if you are a supply and demand style trader, then you have to know. Say, for example, I'm going to show you a trade that I took, and the last trade that I just posted on the Discord community that I took today was off of this supply zone right here. Okay, you have to be able to see setups when they unfold. All right, and I talk about this in just a few of the most recent videos about market structure. Again, if you do not or unable to understand and read the market, you need to understand and truly understand what I'm trying to say right now. Market structure. Okay, it will be the turning key, the gateway to get you into the door to really understand what's going on inside the markets. And as long as you're able to read market structure, all right, follow price action, then you'll be okay. All right, you'll be able to begin to understand and to formulate a trading plan and a strategy that works, because now you understand market structure and you're able to read the market in full. All right, so stop loss. Let's take, for example, this was my supply zone, which it was. Okay, it was a zone of interest for me. Okay, so what I'm waiting for is price to get back to that zone. All right, and if you don't know much about supply and demand, guys, I've done tons of videos covering the strategy of how I trade supply and demand. Simply go back and watch some of the videos, okay, before you start asking questions. Supply and demand, to me, is probably the best means of when it comes to a strategy to being able to trade around. But you have to be able to identify which zones to take your trades from, meaning which ones are high probability and low probability. This is a high probability zone right here, okay? I'm not going to go in detail about it because I just did a video, I think yesterday or the day before, talking about that in particular, about high probability supply and demand zones. So please, if you haven't taken the time to watch that, then watch it. But we trace back to this zone right here, okay? Now, once we get to a zone, it's as simple as looking for rejection. You can look at that or find it by simply scaling down to a lower time frame chart and maybe looking for an M structure, okay? All right, once you get that M structure and it breaks below, then go short, right? But for me, if I'm trading, say, for example, off my 12 range chart, specifically, which is more so my anchor chart or my entry chart, then I'm looking for a break of a candle in the opposite direction. So price taps into the zone, of course, when it approaches up here, and then I'm just looking for, so basically the last green candle or push to the upside or bullish candle, I'm looking for the flip of that with a red candle that breaks it below, okay? And once this red candle takes out this pretty much this area below 46.10.5, then I'm interested in going long. Yes, it does pull back, okay? And this could be a second test if you want to take that entry right here at 14 to continue lower. This was the aim, or the area I was focusing on right here, was to fill these gaps or imbalances. And we also have, if anybody can already, determine what this is right here, sell stops, liquidity resting right below this swing right here, okay? So that would be one area of focus right here to take out my entry at, or majority of my contracts, and then the second to wrap it up as far as maybe my last contract or two right here, okay, depending on how many contracts you trade. All right, so, and that, as far as the number of contracts you should be looking at trade is all about trade management, capital, being able to determine how proficient you are as far as trading, and how experienced you are. So I always recommend people to starting off with the micros if you're a new trader, okay? So the supply zone here, again, I would place my stop once I'm into this trade right here, okay? Once I'm into this trade. I talked about this in the past about two places you can place your trade at. You can place it at the back end of typically the area of supply. So right here above 46.18 and I know a lot of people probably say, well, that's, if I got in right here at 10 and I'm looking for back up here at 18, then that could be possibly like an 8-point stop, right? Yes, it could. We are trading off of a higher time frame here, not the highest time frame, but more so a 12 range chart. Again, you can scale down to a lower time frame like the 4 range chart and really get a more precise entry, I would say, or more of a what am I trying to say here? Exact entry when it comes to actual rejection by looking for that M structure formation, okay? But typically, I like to trade off my 12 range, okay? Now, this isn't probably where I will put my stop at, more so, but it is an area that, you'll find people talking about placing your stop loss at the back end of supply or demand zone. Now, for me, where I'm going to place mine at is once this red candle here breaks below you pretty much 10.5 or 11, I'm going to place it on the back end right here at 16. Okay, so if I'm taking my trade, let's say the break was right here at 09. Yes, you still have about a 6-point stop right there. Again, you can tighten that stop up by scaling down and using a lower time frame chart to time your entry more precisely, in a sense. So that's what I would put my stop at, would be primarily at the back end right here at 16.5. Because once price shows me that it's rejecting, right here, it went up once, pulled back, went up again, and wicked out here at the zone. There's lots of interest. That tells me that the market is really trying to do what? To push possibly lower, okay? Because it doesn't want to push any higher. So once I get the break below, rejecting with that candle in the opposite direction, then I'm going to go short, okay? Now, another thing on what you can do, let me say this, okay? If you are into a trade and you do not really have the capital, or maybe you get spooked out or scared or chicken out of a trade, just look to see where the midpoint is of, say for instance, that area in which you enter the trade from. So if you get, say for instance, a break to the downside here, okay, say at 09, or maybe you got a little bit earlier. You see this last push with this green candle to the upside right here, all right, this candle here. I would look at the midpoint of that candle there, this candle here, this green candle I'll show you right here, and let's call it, say, around 13.25, okay? All right, 13.25. So what you could do is, once you're into a trade, all right, you could call that halfway point of that last bullish candle to the upside there before price started turning down or pushing lower. You can look at that as also an area for stop placement if you choose to do so, okay? So that way you can protect your capital a little more. But in this case here, price would have came back right here and ran that 13.5 area, that midpoint of that bullish candle right there. It would have ran it by maybe a 1.5 before it turned, made direction to the downside. So if you choose to use that halfway point there, I would give my stop some additional room above that halfway point. Maybe not all maybe you don't want to place your stop all the way back at the back end at 16.5, but maybe somewhere, maybe a point and a half above that halfway point right there at 16.5, and then you can put it right there at maybe at 15, okay? And it comes right to that area at the tick, So you can do that as well, all right? Because, if you get stopped out here by putting your stop right here at 13.5, maybe so, then you get the second, you should not say entry, but you get the second chance to go short, because maybe you say, oh, I got stopped out here, but I see that it's still pushing lower. Then take your opportunity to get back in the trade and continue to trade to go short. All right. So this right here was basically a second test right here to get into the trade. All right. Or a second chance. Okay. So, again, I'm talking about stop loss placement. You can, if you choose to, put it at the back end of supply, or at the back end from, just look to see where you get that break of the candle in the opposite direction. And then the, at the top end here, which will be the high before price pushing lower here, you can put it right here, or at the halfway point of that last up bullish candle right there before the market turn and push lower. Okay. So try to avoid making serious mistakes by getting out of your trade quick enough so that you're not incurring a lot of drawdown, and you can get out of a trade quick enough to try to refocus and get back into the trade again. Say, again, if you missed or if you got stopped out here and you said, well, okay, it stopped me out, or it came and hit my stop loss tick to tick, but didn't stop you out, you still were good into the trade. But if it stopped you out, then you still had opportunity to get back into the trade to maybe cover up a 1.5 loss that you took right there, okay, by maybe by putting your stop loss at the back end here at 15, and then get back to the trade, make up that 1.5, and then it continues pushing lower, okay? So that's how you can, avoid the risk and costly errors of, not being able to get out of a trade quick enough, okay? Let's move on to the next thing I want to talk about as far as what you probably want to do to help avoid any mistakes. Now, as I stated just a minute ago, you definitely want to wait for a rejection, okay? Now, what I recommend of how I trade, okay, I'm not telling you to do this, but I just look for the break of the candle in opposite direction type technique, or you can scale down, like I said, use that lower time frame chart. In this case here, we're at a supply zone, so I'm looking for M structure. And you if you look even at the 12 range chart, you got the M structure set up right here. Price pushed up, pull back, okay, all right, pushed up, and then it dropped, and then it pulls back to the zone to the zone right here. So you can use this as simply as a bearish order block. Or order block in general if you choose to go short, okay? So the setup was right here, even on the 12 range chart where you got an M structure right here. You have to visualize it, guys. You have to use your artistic abilities to be able to see those W and M structures. In this case, M structure, okay? We're looking for short, all right? And the last thing I want to talk about is knowing where to really get out of a trade. Lots of people tend to try to ride a trade out. You have to know in areas within the market where it's going to stop when it gets to an area, possibly reject or bounce at before it continues maybe moving in the same direction. But me, primarily, I'm a scalper, so I'm looking to get out of a trade once I know for sure, in most instances, nothing's 100%, but in most instances where it's going to try to focus or target, meaning the market, okay? So it comes up here, here's the supply zone. Once it rejects that area, I see all these imbalances right here resting in between, okay? This was an aggressive move to the upside. What did we have coming on this area right here? It broke structure right here to the upside. So there's a demand zone right here. So I'm aiming to take price of the market back from the supply zone back to an area of demand. And lots of times you'll see the market do that. It'll move from a supply zone off, when it's moving lower and it retraces back there. And then if we have, say for instance, a demand zone right below, and it's a demand zone right below where we had an aggressive area right here where these imbalances are right here. I'm going to focus to take price back down to that area there, okay? Just as well. But the key thing is really, if I see a breaker structure right here to the downside, now this becomes a supply zone, okay? Price retraces back to that area. Once I get the rejection, I'm looking for liquidity pretty much, because price likes to move and take out buy side or sell side liquidity, okay? This case here, we tapped into supply here. There was sell side liquidity resting right below here at 97 3/4. Price comes up there, boom, rejects the zone, and what does it do? Push lower, okay? So if I'm not out already when price taps back into this demand zone right here at 03 and have taken most of my contracts off, which primarily I'd be focused on my next place at 97.5. And typically I'm going to get out right there. All right. I'm not going to ride it any further. So you have to know where to really get out of a trade at, where the market can target, and that be your safe net or your safe zone to get out. All right. Just want to share that with you guys so that when you enter a trade, you know what areas to really target. Okay. Outside of that, that's all I have for you guys. I hope you guys found some value in the content. If it helped you out and you truly love this video, please do me a favor and drop a like on the video. I am trying my hardest to grow this community for the sake of everyone out there who's struggling as a day trader. I want to see people succeed. I want to reach the masses out there of people so that they can understand and look for opportunities to, better themselves, better their lives, be their own boss, okay? Be able to start up their own a business of their own and say it's theirs, and be able to do it in the confines of their own property, their home, wherever you are located across the globe. That's all I have to share with you guys today. If you're interested again in joining the Discord, find the link down in the description portion of the video and invite yourself in. All right, there's 2 channels there: the general chat and the trading floor. The trading floor is where we come together as community members, and we post screenshots of our entries, and we also discuss entries as well. So I appreciate everyone tuning in today. Please drop a like. If you haven't subscribed yet, please take the time to go ahead and sub, and make sure the last thing to do is to turn your post notifications on by clicking on the bell. That's going to turn everything on. Turn all your notifications on so you never miss one of the uploads. Take care.